Welcome back, everybody. Today we're going to be talking about how to roll a position, and I think it's just a good skill that everyone needs to know how to do, especially with the market going down. You might have positions moving against you, so a little refresher on how that works, and you can see a real example that I did and the thought process I did while going through it, because there's different things you can do when rolling a position. Then we're going to jump into my portfolio weekly review, where I go over my stats for the week. I go over my trades, both good and bad. I'll even talk about how I almost lost a 3 months worth of salary in one day, and then we'll go over earnings, and then we'll just jump right in right now. So we know from previous videos that I sold a SPY put at the 420 level that was in the money, and before I was talking about how I tend to wait towards expiration to manage positions to let the extrinsic value get out. Well, SPY got down to 410 or 412 on Monday, and the extrinsic value was minimal. It seemed like it was $150 left on my contract. And with 18 days left, I decided, you know what? Let's go ahead and manage it now. Sometimes it's hard to just sit in your hands and do nothing. You want to do something active to feel like you're doing something. And so I ended up rolling this position. I'm going to go through that process and show you some of the ideas that came up while I was thinking about doing this before we jump into the regular portfolio review. So on Monday, my 420 put was for May 18th, and I actually closed it for 1666. But for this video, I guess we'll use the numbers given here, so 1530. Let me pull up a little notepad here, and we'll put that out. So we'll say we close this for 1530. So you buy to close to finish that, to close that position. So in this example, I would go buy, submit the order, and be done. But what I ended up doing was going out 30 days. I went to June 17th. So now I'm back to 45 days on the contract, or 46 in this case. So I just really rolled out 30 days from when that was. And when I was looking at this, I had some different thoughts that came up. So first off, I could roll to the same strike, and you can see that I could receive a credit. So let's call that a fill at 21. If I was to sell that guy, pull up that notepad again, and I got fill at 21. So if I chose to stay at the same strike, I could roll for a net credit of about $570, which is, pretty nice. But when I was looking at this, I saw that the delta was still pretty 50-50, or I guess in this case it's 58, so 58% chance of having to manage this position again. And I saw that there was a lot of value that I could roll all the way down to 410 to still get a net credit, although it's a minimal credit. So I guess sometimes when you're rolling a position, this might be something you want to think about is, do I want to continue rolling this position forever at the same strike, or do I want to try to be aggressive and get rid of the burden of having to manage this position going forward? So for me, I tend to prefer lowering my delta to get out quicker and get rid of the obligation to fulfill that position. Now, what I was first looking at was actually doubling down row. So when you buy to close one for 1530, and then sell two new ones further out in time to make up the credit difference. And when I was looking at that, I saw that I could get all the way down to 380 and do that. And I think either one would have been good. So in this example, if I was to do the double down row, I would sell the 380, but I would do two of them. Combined, the net credit would be more than what I bought to close the previous one for. And then I get my delta down below 30, which is where I tend to love to be at. But ultimately, I decided, you know what? 410 is really good for SPY. It'd be nice to be at 380 because even the worst projections show 380 being the bottom for SPY. But even at 410, I could still roll that out next time if I need to. So I actually ended up rolling to 410 for a small credit. I have to, when we look at the trades, we can see what exactly I got for that. But the result of rolling down, though, is that you're making less money overall from the trade. So originally I collected about $550 for selling the original put, which is $550 of income for my pocket. If I roll to 420, that just means I just had to wait 2 months to collect that $570 now, because I would have got a bigger credit. But now that I went down to here and I rolled for a 20-cent credit, it means that I've waited 2 months to get out of this position to make $20. So when you change your strike price to lower it to get out of the contract like this, and you're giving up that the smaller credit you get, the less money you made over that time period. Does that make sense? I hope I explained that pretty well. So I was giving up profit to get out of the obligation to have this on my account, basically. Uh, all right, so I think that covers that. Let's go ahead and go back, and we'll start looking at the portfolio review. So this week actually ended up being pretty good for me, despite the craziness that went on. Actually, on Wednesday, after the JPOW meeting, my account was back up to 223, which was just 2,000 away from my all-time highs. And actually, it's higher than anything that I had logged here. Like, my account at one point was 225. This week, it was back up to 223. Like, well, that's pretty exciting just to have the air come out of the balloon for Thursday and Friday. Overall, my account from last week is actually up about 4,100 somehow over that. Year to date, my account is up $37,000, and that's about 20%. The all-time high was 26% for the net account balance, and then my overall year-to-date percentage return is somewhere between 16 and 18% right now. So, like, remember, this number doesn't include contributions, which I haven't done too much, but I have contributed some money. Quick overview this week, since it's only the 1 week in May, I realized $1,257, which is awesome because if you remember, like last week, my video, I actually changed this to predict negative May because I was chalking up an AMD position to be about a $5,000 loss, and then I thought the SPY position that would be rolling would be another $1,000, so I figured I'd be starting May off with a $6,000 realized loss, and if I only made $1,500, that'd be the end result. But had an awesome week, and we could probably just change this back to not 15,000. Though that would be pretty nice. Change that back to 1,500 as a prediction for the May income, but it was a pretty good week overall. Let's go ahead and start looking at the trades. So you can see I was actually pretty active this week. We did have a couple dividends get paid out that drip shares, and it's kind of funny seeing like they charge a commission to drip shares, which I hate that. Jerry from the Retire with Less series on YouTube, he said that some of his dividends got dripped twice, which is a mistake from Interactive Brokers, which I was surprised to hear that would be a thing. Like maybe the script got ran twice. So I guess the system it's got the potential for glitches, so just be sure that if you're using drips on Interactive Broker that they're actually working. Monday, I got a little frisky and I bought a call on Amazon at 24.20, and then immediately after it moved up like 7 points, and I was able to close this for $400. Nothing too exciting there. We talked about the SPY put that I rolled, so I closed that for 1666 for a net loss on that position. And then you can see that I rolled it out to June 17th for 410 for a net credit. I guess I almost got a dollar on that, actually, so I lied before. But I made a little mistake. Remember when I said I was looking at the double down row? Well, I actually had the order in and changed my mind at the last minute to change to the 410. But I had already put in the quantity to 2, and when I put in the new order, it defaulted to 2. So I actually sold 2 of these, and then when I realized that, I was like, nope, not doing that. So I actually went and immediately closed one of those for a small $10 gain. So a little oopsie daisy in my favor right there. AMD, I think I talked about this one already. I closed that for a loss, 23.56. I mean, that's a significant loss. I closed it before earnings reported. Had I held it, it looks like I could have came out to break even during the following day if I held it, but it never got to like a profitable position from where my cost basis was. But, you know, you can only do what you make the best decision you can at the time. I didn't want to have out of the money calls on a position. Like if AMD just stayed flat, the IV crush would have killed it. And so I'm not upset about this. In fact, like it's probably better because originally I was chalking up like this 425 per contract to be a complete loss anyway. So I saved that money by closing it. So Was it the right decision in hindsight? Maybe not, but it is what it is. uh, the what is this, Tuesday? I think it is still here. Amazon. I decided to sell a put on Amazon because I thought the extrinsic value was pretty high, and I thought, I mean, there's no way Amazon's gonna get below 2,300, right? That's gotta be a safe area. So I sold that contract, and then after I sold that, I was like, you know what? On YouTube, I preach all the time, like, it's okay to buy insurance. So I ended up turning that into a spread. So I bought the 2,100 for 80 cents. I gave back $80 to buy insurance to limit my max loss to $20,000 if Amazon really like went horribly wrong and went down to like 1,800 or something. Who knows? So just a little insurance fee right there is how I kind of picture that $80 being. And then also interesting enough, it was neat to see that the margin requirement was reduced drastically by buying this put, because obviously my max loss changed from $230,000 to $20,000. So it relieved about 50K of pressure or margin maintenance. And then later in the day, I decided to actually put on another bold put spread. So I sold another one for 1358 credit. And then later in the day, I actually closed those both out. And what's interesting is how Interactive Brokers displays the P&Ls for these. Like, they were the same strikes, but one was in a combo order, the other one wasn't. And it just looks weird. So, like, the 2,300 put, I sold for 824. I bought back for 462. That's like, what, a little under a $400 gain? But, like, the realized P&L shows 704. Like, it got displayed really weird here. Like, the numbers add up correctly over like the course of both positions, but it was just interesting to see that come up like that. But overall, those bold put spreads paid off. Made back a lot of the losses from the AMD, which was awesome. And then the JPOW meeting happened, and everything took off, and so I closed a lot of positions. Like, closed when SPY got back up to like 423, 424. I thought we might pull back there. Turns out SPY shot up to like 430. Whoopsie. But locked in these gains, it just took risk off the table. So PayPal 80 put, even though I like PayPal at 80, it was near 50%, so I took it. Ally 40 put, this is actually out of the money now. And again, $57 profit, so almost 50%. Took the win. Intel, again, like, it was an opportunity to take stuff off, so I went ahead and did that. I actually thought about closing that 410 put for SPY that I rolled to, because that was actually at like 50 or 60% profit. Had that not been part of a rolled position, I probably would have closed it out. But that whole mentality of linking trades together because it was a rolled position. This position I wanted to hold on to make up for the losses for before, that kind of sunk cost fallacy. It's just one of those things, like, is it a mistake to think of all trades as a link in a series or not? Because, like, the correct play might have been to close that, and just overall, those two trades would have been like a $400 loss, and I could be selling a put today. So just something to like consider. Like, even if you're rolling a position, is it better to think about those on their own 2 feet? Like, the history doesn't really matter. The market doesn't care about the history of your trades. Why do we do that? Because we don't want to see ourselves losing resources. Anyway, so that 410 put's still on. I think I just talked about all of these, right? Okay, yeah. So now we get to some of my more questionable trading, or aggressive trading, however you want to call it. And I started off Thursday by selling a put on Amazon again. I thought Amazon was going to go up, so I went ahead and sold a put, and I wanted to like see a movement and then just get out for a quick profit. Amazon was going down. I mean, it wasn't near the money at any point when this position was still on, but I decided to go ahead and just close it out, and then turn around and change it into a bull zebra position. And so I opened that up, and this one cost, I think it was $104 to open up the original one here. And then later in the day, I doubled down on it. So I add another position because it costs less. And then I put on 2 more. So my average cost basis got lowered significantly. All day Thursday, Amazon just kept going down, 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 down. It touched like 2,300 before it spiked up at the end of the day, and I was able to get out. I sold them all for $88 each for a net credit, or a positive result in the end. But I think at one point, when I had all 4 contracts on, the loss from this was up to 5,500, and I mean, had a nice little spike where Amazon shot back up to 2320, and I was able to get out. So I took that and ran with it. What's interesting with options is just how easy it is to leverage up. So at this point, I was controlling 400 shares of Amazon for about $33,000. I mean, just think about that for a second. Like, at that price range, that's $920,000 worth of stock being controlled by $33,000. Like, it's crazy the amount of leverage that you can get with options and how quickly it happens too. Like, it's getting the gains or losses of controlling basically $1 million worth of shares. Like, whew. I probably doubled down a little too early on these, and I'm not gonna say like it was the best idea to continue doing that throughout the day. It worked out for me here, but it's not a strategy that I recommend long term. Eventually, I will take a big hit for doing something like this. Like, it's inevitable. If I keep doing this, it's going to happen, and I accept that risk. So far, it's been working. Part of me just like is waiting for Amazon to. I should probably move my face so you can see that, huh? Part of me is waiting for Amazon to do their split so that I can stop being tempted by Amazon, because I've just been making so much money, I feel like I can't lose on it. And then the other half is like, no, I don't want this to split because I've been making money on it. So I don't know. Can the split come already so I can stop doing this? The last trade I did was on Friday, and I signed in. I saw SPY drop with volume, and Amazon was lagging behind it, and so I quickly jumped in on that. I bought 5 contracts of Amazon, and immediately after getting filled, the ask went up to 29, so I turned around and closed it. So this trade lasted for less than 10 seconds. I was literally in, so out. That was pretty crazy. Like, I mean, it was pretty crazy. 1,210 seconds. And that actually made me go positive for the week and bringing May to like a positive month so far, which is just awesome. But again, not the theta strategies that we normally talk about here, and not really stuff that I would say you should be doing until you really understand options and the risk involved. The whole Amazon Zebra thing here, I try to aim for like 6,000 per position, and in here, like, I had 32,000 at risk, which is a lot. So I kind of went against my own strategies, or what I normally do, and maybe over bet here. Like, that's something that you shouldn't be doing. I did. It worked out for me here this time, but next time it might not. Just don't think that doubling down every time is gonna work. It's eventually not. So just don't use it as an example and do it. Next thing, here's a snapshot after close on Friday. I think at close, this was more like negative 900s. I guess some stuff moved in my favor after hours. There's the 215 maintenance back down to 56K. And then here's all my current positions. And we can actually go through and talk about them. So, Chewy, $30 put. That's a price I do like Chewy at. I do run the no assignment strategy, so if Chewy finishes in the money, then I would go ahead and roll that position out in time. But I like to think of it as though I'm taking an assignment. Like, do I like Chewy at 30? Yes. So eventually, with that thought process, that means that at some point, Chewy will be above 30, which is why I think I can roll that position until it's a profitable position. That expires next week, so we'll see what happens with that one. Virgin Galactic, I think this one's actually in the money now, but it's a small position. 5 times 700 is $3,500 to secure the position. Again, If this one's still in the money at expiration, I would just roll it. It's a small position that's why you use position sizing, guys. So when you do get losses, it doesn't matter too much because it's a small portion of what's going on. IWM at 180. I still like 180 for IWM. I'm not worried about this one yet. Ford at 14. Again, that's a small position. It's only down $4. These SPY positions, you can see I got one expires in 27 days. The next one expires in 41 days. Hyliion, this is a weird position that I solely put at 1,200, bought 2 calls. So yeah, I have almost a $3,000 loss here, a 3,000% loss here. But it's got until 2024, and at this point, it just kind of serves as a reminder, like, don't go too crazy in the meme stocks or the hype train on what YouTubers say. It's just a reminder, like, you can get 3,000% losses too. And then over here you can see like the QYLD's taking a beating, obviously, down to 1911. Woo. So about $8,000 of unrealized losses in QYLD. Can't wait for that dividend to drip more shares. And I saw this comment on my video that I released on Friday from Eduardo. I hope I said that right. And it just was an awesome comment. It made me feel really good. So I just wanted to like wish you the best of luck. He made the choice to quit his full-time job to do day trading. And like, I wish him the best of luck. He said he respected one of my videos where I talked about my losses, and you gotta be more specific. I seem to lose a lot of money. But I mean, I really did enjoy this comment, so thank you, Eduardo, and I wish you the best of luck. Earnings next week. There's not really much that I play coming up next week. I mean, I see like SoFi's in here. You got Duke Energy. Coinbase was a stock that I was gonna sell puts on, but I never did, and luckily I didn't because I would have been selling puts at like the 230 range, so that would be a horrible position that would be rolling right now. Disney is coming up as well. It'd be interesting to see what happens with Disney, with Disney Plus, based on how Netflix reacted and stuff like that. Hope you guys had a good week, and that the craziness didn't hurt you too much, or hopefully you made some money this week, and I'll see you guys next time.